Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and with me somebody very, very special. Mr. Soumya Kanti Ghosh joins in. He's the Chief Economic Advisor at SBI. Welcome, sir, and thank you so much for speaking to us on Business Today TV. Well, the budget is done and dusted. The first question that I want to ask you is that, a lot of people have described it as a Bahubali budget, as a budget which has Diwali Dhamaka. But from an economist point of view, is it an economist-friendly budget?
Yes, I think the good thing about the budget is that the numbers are conservative, and whatever an economist or tick box should have wanted, that actually has been worked out in the budget. It's a pragmatic budget, it's prudent, and the numbers are actually what has been the government has been doing in the last couple of years. I mean, doing more and saying less, and this budget exactly does that. So from the point of view of an economist perspective, I think this is the perfect budget for the markets and for the economy.
What do you make of the numbers, like 6.5% on the growth number and the nominal growth at 10.5%? Is it achievable?
I think 10.5% again is a number which has been, I think, very nicely dovetailed. Because the number doesn't talk about, I think, about a runaway nominal GDP growth rate. And given the fact that 10.5%, there's a lot of uncertainties, as you know, the global economies are going through a lot of uncertainties. So if I take all these factors into account, I think 10.5% is a very reasonable number to work with in the budget.
Right, absolutely. But do you think that, looking at the macroeconomic uncertainties, you did point out we're looking at a potential recession in some of the advanced economies right there. Will this budget do enough to really push the needle on growth and, create more jobs?
See, the budget has laid out a blueprint from most of the sectors. Agriculture is one of them, infrastructure is one of them. Agriculture, MSME, infrastructure, all sectors has something in it for the budget. So the budget is also trying to give a facelift to the domestic demand apart from the external demand. And so my sense is that I think possibly we may be looking at the end of the year, when you look into the numbers, I think possibly we'll be able to see that the budget being able to achieve a lot. Just one data which I want to highlight to your viewers. I think there has been a lot of talk about whether the government will be able to do 10 trillion capex. Last year the government said we will do 7.5 trillion. In the revised estimate, it is 7.3 trillion. So even if we are even close to 90% or 95% of 10 trillion budget, I think I believe we should have done a wonderful job.
Absolutely. But is there a risk of that budget creating more inflation, higher inflation from your own? It's just started to cool off a little bit, but is the budget inflationary in nature?
No, I think inflation basically happens if you look at the fiscal deficit. That's the two components. One is the revenue deficit part, one is the capital expenditure part. My sense is that if the capital expenditure is as a part of the fiscal deficit is now at 17-year high, and whenever that part is high, I think there is less chance of a fiscal deficit, because you are not putting money in the hands of the people. You are actually empowering people and allowing them to spend on whatever they want. So if that's the way you are thinking, I think inflation may not be that much of a problem in the current fiscal.
Right. The government has done enough and everybody's got appreciations on the glide path that the government has announced as far as the fiscal deficit is concerned. You've talked about the buoyancy of the revenue and also the quality of expenditure that we are talking about. Will it really help the government to really meet that 4.5% target?
See, in terms of the deficit, I think 4.5% every year you have to cut it by 60 basis points. The government has cut it to 5.9% this year. And my sense is that if the nominal GDP numbers are actually higher than 10.5%, then this deficit could come down even lower. And the revenue buoyancy has been holding out. And it's now because of lot of the compliance efforts which the government has given. So my sense is that we may be a little less worried about the revenue figures now. The only way to look into is that in terms of expenditure rationalization the government is doing and putting expenditure in priority areas, which is the capital expenditure, which the government has already laid out the emphasis in terms of the sectors and the schemes.
When we talk about financialization of savings, on the one hand, the government has really announced this new tax regime and the changes to that. Really, as the default regime, we are talking about a shifting towards the new, tax regime as well. Your take on that? And secondly, on the new schemes announced, like for the Mahila Samman Patra as well, and the enhancement of the senior citizen, how do you really see, financialization of savings now moving ahead?
In terms of the financialization of the savings, I think that have moved ahead. My sense is that I think the steps to encourage the women savings is a good step, but we will have to watch out for how it works out in the next 2 years. So that's one thing. The other thing is that in terms of the new tax regime and the old tax regime, I think it will take time for that system to evolve in the people's mind, because we have been accustomed to a tax structure which is trying to incentivize people. Of course, some sort of an incentives are always important in a country where household financial savings actually has declined after the COVID and other things. But my sense is that this the new tax regime will slowly evolve over a point of time rather than being dramatic, because the government has been trying to push it. Unfortunately, we had a pandemic, so the entire process stopped. Now they are trying to again push it. Hopefully, over the next couple of years, there will be more people willing to join this new scheme.
Last two questions, Soumya, on the RBI, Monetary Policy Committee now beginning this 3-day meet as well. This comes right ahead of the FOMC meeting and the budget as well. What is your sense on which way will the RBI really move? There was a sense that perhaps we are going to be hitting a pause very soon. Is it going to be happening this time around, or do you anticipate a 25 basis hike?
Difficult to say. We hope the pause comes this time or next time, but we are almost towards the end of the rate hike cycle. But the central bank will remain caution and vigilant, and they will continue to say that we are focused on bringing down inflation to a sustainable level of 4%, which the RBI has emphasized. So my sense is that it could be a very close call in terms of the rate hike or a pause, but at the end of the day, the central bank is not going to give this away, given that it has increased rates continuously over the last couple of months, and it doesn't want to give away to the market the good impact of that rate hikes which we are now seeing.
How soon do we see rate cuts happening now?
Difficult to say, but everybody wants a rate cut at some point of time. If the inflation comes down materially, which the RBI projections are showing, I think there could be always possibility of rate cut opening up towards the latter part of the next fiscal year, but it's very tricky to say at this point of time.
It's going to be a prolonged period of a pause.
It will be a prolonged period of a pause.
Thank you so much, Soumya, for being with us and sharing your thoughts with us. Thank you so much.